Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Asian markets down in early trade. Investors attempted to shake off jitters about trade tensions between the United States and China.
If the start is lower, perhaps buy on dips could emerge. That could be interesting. That's something that I'll watch out for. So the good trade is to sell the rallies and buy the dips in this band.
We're able to understand that LIC, will be picking up 51% stake in RBI all put together.
That's the first rate. The Nifty is down about 5 points. Down 10 points now, 10,812.
We are consistent with the SPI selling day in and day out. Still it's holding. And the reason I think it is holding perhaps is a lot of churn is taking place in people's portfolios. People who are underweight on large caps are now moving to the large caps.
KRBL is no way concerned in Augusta West indeed.
You're confirming that KRBL will feel no impact of this ongoing investigation?
No, not at all.
We do gather that August 1st could be the next target that both Idea and Vodafone would be working on.
Almost 2,500 factories have closed down. Almost 300,000 people or 3 lakh people have lost their job directly. Indirect unemployment would be more than 1 million people.
The market seems a bit drained out, doesn't it? 28 points lower on the Nifty.
Again, market following a template. Yesterday was, Friday was a big up day. So today, the market's taken a bit of a foot off the pedal, down about 120 points on the Sensex. This is closing well. I'm Anuj with me, Surabhi. Hi, Surabhi. Good afternoon.
Good afternoon, Anuj. You've been making this point that it's just going one day up, one day down. Today, the range is just 40-45 points. And again, if you look at the number of stocks that are outperforming, that list is getting even narrower today. Just in Infosys, the same Bajaj Finance. Not much beyond that.
Exactly. You know, the Bajaj twins and today the HDFC twins, at least one of them has sulked a bit. But overall, Surabhi, the market's given you enough messages now that the range is intact. And within that, if you trade the boundaries, you'll make a lot of money. By buying the dips and by selling the rallies. Today has been the day where you sold the rally. Yesterday the market, didn't violate the first hour low, or Friday rather, on the way down. Today the market didn't violate the first hour high on the way up. And that's how you have to play this market. And within that, identify your stocks and play them. Once again, there are few stocks where you're seeing some bit of decline as well. I think Stride, Shasoon and a couple of other stocks, Sun TV, Ashok Leyland, Escort. So this whole mid-cap problem is coming back. And while on Friday, on a good day, advanced decline was in favor of declines, today that graph is even more telling. So, I stick to my point. The index might be telling you something. Portfolios right now, this is not a 10,800 market. This is a 10,800 market because 5 or 6 stocks are just batting for the bulls every day. If you look at the broader market, it's nowhere near a 10,800 market. It's probably a market closer to 10,200 if you're lucky, as far as the broader market is concerned. But on the index, you have to accept the market's verdict, which is that we are range bound.
But Anuj, I don't know whether this then tells us that an actual break on the index is also just a matter of time. I know this is a point of conjecture right now, but again, the profile of stocks, and you mentioned some of them, Ashok Leyland, Sun TV, Motherson, almost all PSU banks are lower today. Even strong stocks like Mindtree are down. The constituents of the mid-cap move are also, we can't just write it off as only a KRBL, only a Manpasand and Vakrangi that are falling now.
Oh, obviously, and that's why I said, stocks like, you just hit the nail on the head. Mindtree, NIIT Tech, Ashok Leyland, till 3 or 4 days back, Tata Global was making, lows consistently. Unless, and of course, you have been in a name like Page Industries or a Bajaj Finance, and, there's just 4 or 5 names. That, of course, is a different issue. And, the screen is telling you that there's a bit of a problem in the mid-caps. And not just ranked mid-caps, as you said, some of the good quality mid-caps as well are now corrected.
Okay, well, let's see what the next 1 hour has in store. How should you position yourself in this environment? Well, we've got the experts in the house to answer that question. Prakash Gaba joining in, and we will also get you more views as we go along. Prakash, good afternoon. So let's get your take on trade. Indices haven't moved, but what is the call? Is there a trade either on Nifty or Bank Nifty, first of all, that you have?
I don't think so.
Okay.
Well, in the morning we did speak about 10,787 and 26,633 on the Bank Nifty. And market is trading exactly somewhere it's closer to these zones. So good place to bounce if it has to. What we have seen in the last 1 hour on Friday was a big up move. So what we were seeing, that was an expansion. But after an expansion, we normally tend to see a contraction. What we are seeing is a contraction. The contraction could last today and tomorrow perhaps. And perhaps again an expansion could start here. So we are into contraction phase. Taking a trade at the last 1 hour, the Nifty Bank Nifty would be slightly troublesome for some people. So best to avoid it, go stock specific.
Okay, go stock specific. Prakash, good afternoon. Then what are your stocks?
Good afternoon, Anuj. I think I like 2 stocks, both on the short side. I'll go short with DLF. Perhaps we can see a down move around 193. It could extend even until tomorrow. Stop about 201 on DLF should be fine on the short side. And second is the HPCL. That looks a tad weak. Some kind of profit booking is set in. Possible target on the downside is in the vicinity of 290 zones. Stop about 310.
Okay, well, we also have Mr. Tulsian and Mayuresh joining into the conversation this afternoon. Mr. Tulsian, let me first start with a stock that we already discussed in the morning, but the extent of fall on Tata Motors today, 5% down following the management interaction on JLR. What do you think is a fresh negative trigger that the market is reading in, taking the stock below 300 now?
See, Surabhi, in the morning I said that probably this may not get liked by the market because the roadmap is for the next 3 years, and what I have said in the morning seems to be bothering the market is the capex of 1,20,000 crore. Because if you really see already the balance sheet is seen to be debt ridden, and in fact it's not seen to be giving any kind of productive investments. And I have said that if you have this kind of capex coming in, you will be seeing the interest and depreciation burden getting increased. So you may see the absolute EBITDA increasing, but I don't think that there will be much respite or much cheer to be seen on the bottom line. So I think probably this capex plan of 1,20,000 crore having outlined by the company seems to be bothering. And one will not accept these things until they see the actual picture seen getting reflected in the quarterly numbers going ahead.
Okay, of course, Anuj, today anyway a lot of European auto stocks are also down, but I don't know, can we draw that one-to-one correlation?
No, when we were doing top 10, I was surprised that we thought Tata Motors would be in green because Daimler and all these stocks were down quite a bit on Friday, and I completely take Mr. Tulsian's point on the guidance front as well. And on a stock like Tata Motors, the market would want the verdict that you should show results.
Yeah, numbers.
All of this has to reflect in numbers. The market gives 2 hoots about guidance right now, whether you are Tata's or anyone else. The market wants to see evidence based by numbers. You show 1 good quarter of Tata Motors JLR numbers, and you will see, the guidance and all won't matter. The stock will surge. But till that happens, it's a stock which has continuously, and it's a stock where at every level, I know a lot of people are buying. I'm thinking that, okay, how much more can it fall? It doesn't work like that.
Waiting for a Sun Pharma moment on Tata Motors.
Exactly. Let the market give you that outcome. For now, the market's not giving you that verdict. You need to come out with 1 good quarter of JLR. The guidance will not help. The numbers will help.
Oh, absolutely. Okay, that's one stock that's on the move. Let's also bring in Mayuresh into the conversation. Mayuresh, I'll take up a different clutch of stocks. Some of the cement names are actually holding up in a weak market. There's been some talk of price hikes as well. Would you recommend buying anything within the cement pack?
Afternoon, Surabhi. So again, I think if you probably look at the cement sector as a whole, and if you divide the economy into 4 large zones, again, I think the south-based companies have clearly struggled, both in terms of sand mining issues and input costs actually plaguing their EBITDA per ton. On the other hand, I think the logical conclusion of passing through prices because of input cost push-throughs were a logical takeaway. But again, I think the volumes is something to be looked out for. I think specific players operating out of the central of the country, and again, I think catering to the north or the west and the eastern markets, in my opinion, should do well. Having said that, my own sense is that within the large caps, I think the whole recommendation on Ultratech still continues because of the strong delivery that it probably has done on volume fronts. How it will sweat the JP assets is clearly going to define the overall dynamics in terms of return ratios. But from a bottom-up approach, my own sense is that a stock like JK Lakshmi Cement is something that I'm finding it very, very interesting in terms of the captive power plant that they've put through the cost optimizations because of the conveyor belt like its Durg plant should obviously abet the EBITDA per ton. In terms of the volumes as well, the volume growth should sustain over the next few quarters. Can it be sticky for cement companies? Absolutely yes, over the next 2 quarters with monsoons around. But the second half probably should reflect that with utilization levels actually picking up. But my opinion again is that one needs to be very, very specific. So I think within the mid-cap universe, JK Lakshmi Cement probably remains one of my top draws.
Okay. Mr. Tulsian, your thoughts on this big move in Pnb Housing? Despite the denials, the stock is up 12%. we had seen in the past how, when the similar story was being played out in Canfin Homes and that didn't materialize, it led to a big correction in the stock. Do you think something similar could be the risk for Pnb Housing as well?
Seamus, that risk exists, but this time there are two tracks of 33% each. If you really see, one is of the promoter, that is PNB, which can get correlated with this big disappointment we have seen in case of Canfin Homes. But this time, it is likely that PNB may think of, because of the distress it has been passing through, because of this Nirav Modi scam and all that they are looking to monetize their all non-core assets. So probably that is possible, number one. Number two, even if it doesn't happen, the Carlyle, the other PE investors, those who have been invested in this housing finance company, having a stake of closer to about 38%, they have already sold about 5% stake. So that stake is seen to be coming for sale definitely. And I think that even if you have disappointment of 33% not coming in from PNB, one can buy the stake from Carlyle. Only point will be that then the acquirer will not get the promoter status, but that will be triggering the open offer also. And I have said that in case of HDFC, if you compare it with the Guru Finance, which has also been acquired by them with a stake of about 58% now held by them, and if hypothetically, I am just saying that if HDFC acquires 33% of Carlyle and give the open offer, they will be having 58% stake, which will really be vastly re-rating the stock, and that will only happen if HDFC is able to have a word with or assurances from PNB that even they are looking from it. But yes, you always have that risk that you never know, because these are the policy decision to be taken by the government ahead of elections, whether they turn it down. Maybe any kind of sensitivity may see that PNB may change their mind to monetize their 33% stake. So that risk always remains. But if I come on pure fundamentals also, and the kind of performance if you have seen in Pnb Housing, they have been giving a consistent growth of about 25% per annum. If you see on FY18, EPS has been at about 50 rupees, FY19 EPS is seen at 60, 61, 62, FY17 EPS was at 38 rupees. If you take a price to book, it is at maybe at FY19 at a price to book of 2.3, 2.4. Maybe on a P multiple, if I take 60 as this one, the P multiple is seen to be closer to about 20. So even on the fundamental parameters, the stock is not seen to be quite expensive. Having risen today by about 12%, one may say that it has reached to its optimum level, or may have little more upside if these events of stake sale doesn't come. But overall, I think that if happens by PNB, that will vastly re-rate the stocks if the buyer like HDFC comes in and acquires.
Okay, let's also bring in Rahul Mohinder of Veratech India into the conversation. Good afternoon, Rahul. I want to start off with two specific stocks, ICICI Bank and SBI. Now, in the interim, last 2-3 weeks, it seemed that they're starting some kind of a smart trading rally. But has that been truncated on both of these stocks?
Well, I think, first of all, the trend for the banking index still remains up if you look at the medium to long term. But again, it's a very stock specific scenario. And, given the two stocks, the two majors that you named, SBI and ICICI, my preference would go towards an SBI, clearly because, the last 5 or 6 trading sessions, you've seen a decline. You've seen a big consolidation over the previous 3 to 4 months with range bound price activity. So really at these levels, I would be a buyer into SBI. If you're someone who's trying to tread cautiously, you might want to wait for a short-term breakout above 273 and then buy into SBI. But broadly, keep a stop loss of 261 and go with SBI given a choice. ICICI, I am not in a mode where I would say I'd go out all out and buy it at this stage. I still feel you could see kind of a tepid price action, more sideways to negative. Nothing extreme though.
Okay, the market, by the way, is taking a bit of a tumble right now. And if you take a look at the Dow futures, that's actually down quite a bit now, almost approaching a 200-point fall on the Dow future. And if you look at European markets, now big cuts across most markets, 1.3 to 1.5% lower is what we have on some of the big markets. DAX, for example, is down about 1.3%. And a couple of other markets also down quite a bit. We'll take a break. Up next, we'll chat with Anish Damani of IDFC Securities.
market is a little wobbly now. Look at Bajaj Finserv. There's a bit of profit-taking of sorts that's kind of setting in. Even on that stock, it's still up in positive territory, but just barely so. That's what we're talking about. And Reliance has been very erratic through the course of the day. It's been all over the place, all over the screen. Right now, looking at a cut of about 0.5%. Well, on that note, let's quickly get in some more trading ideas going. Sandeep Wagle is with us. Good afternoon, Sandeep. What are you working with?
Afternoon, Surbhi. I would go with a buy in a TVS Motors, stop loss of 594, target of 612, and a sell in a L&T Finance Holding, stop loss 159, target 151.
Okay, Sandeep, thanks a lot for those trading ideas. TVS Motor has made a big move after a long time, but look at some of the PSU banks now. Allahabad Bank is now down 9%. Just see the intraday chart on that one. There's, of course, Motherson Sumi, which is down about 4.5%. Ms. Tulsian, thoughts on Motherson Sumi? That's also seen quite a bit of correction of late.
That's right, Anuj. And in fact, reason is not known, but definitely, we will be buyer at a level of maybe at 280, 284, anywhere between that if the stock corrects to. And honestly, I don't know the reason for such a big fall. Okay.
Well, again, one green island in an otherwise Red Sea has once again been the graphite twins. HEG still holding on to some 4.5% increase. Graphite India was also up. Mayuresh, obviously, Jefferies is the big bull on graphite and these stocks. But do you concur? Would you advise buying either HEG or graphite even now?
Very difficult call, Surbi. But again, I think the dynamics still in favor of these graphite producers. And going by the demand-supply dynamics, if you look at the EAF route, there's clearly a lot of scope of expansion, because what the Chinese facilities have done in not just closing facilities to the tune of 150 million tons, they're probably extending that to around 155 million tons over the next 3 to 4 years. Having said that, I think the new EAF facilities that will probably come up in China, I think would be to the tune of around 66 MT. So there is a clear mismatch in terms of demand supply, at least from a medium-term perspective. The other perspective also is the availability of needle coke, which is a critical raw material required. Now, I think there have been adverse or certain reports which probably are saying that there might be some amount of constraints in probably supplying this. Therefore, the low-cost inventory that a lot of these players enjoyed, which was very, very evident, for example, in HEG's EBITDA margins of 63-64% for FY18, that will clearly start coming down, because I think the next round of inventory will obviously be at a higher level. But again, I think the benefits that they probably derived in terms of cash flows, with balance sheets getting cleaned up, cash-rich balance sheets rather, working capital constraints no longer there, and a large element in terms of their capacities working at almost 80-85% levels. I think if one goes by those assumptions, I think there is a sufficient amount of earnings story still left. But there are a lot of moving parts, as I said, in terms of valuations. Again, I think it's not that these stocks are awfully cheap. But yes, from a medium-term perspective, till all these circumstances play out, I think the dynamics are still working in favor of these graphite electromaterials. The realizations also have been extremely strong. So again, I think the earnings story might continue at least for the next 2 quarters.
Okay, Ms. Tulsian, how do you approach a stock like KRBL? There's been some clarification, but of course that hasn't helped. The stock's down 20%.
When you have such controversies in such a weak market on mid and small cap stocks, it is better to remain away. But coming on the fundamentals, as such, the rice stocks were not seen to be having comforting valuations because of the erratic kind of financial performance seen from any of them. And KRBL was always seen as the quite highly expensive, maybe with less comfort seen on the financials and maybe on the corporate governance issues, etc. So considering that, I think the clear avoid for KRBL, at least till this clarifications comes down or the valuation comes to a realistic level, and as such the neutral to remain away call on all the rice stocks.
Okay, 50-point cut now on the index. That's the Nifty for you, and then Bank Nifty is looking at slightly bigger loss, about 170 odd points for the time being. SBI, ICICI Bank, these are some of the constituents. Even Reliance, Anuj, I mean, that was almost all through last week. That was one strong pillar for the market. But even that stock under pressure. What do you make of the market right now?
Yeah, once again, Surabhi, today we are discussing all these names because the market's down. Perhaps perhaps tomorrow again, all these names will be taking the market higher. Yeah. Essentially, what this range is now so well and truly there. I mean, if you, for example, if you're chasing today this market on the upside, you're making a mistake. Going by what the market has told you, right now the market does not have triggers to take out either the 10,900 mark on the way up or 10,650 mark on the way down. Now, of course, this trading range of 250 points cannot last forever. It's now lasted for more than a month.
Yeah.
At some point, it will break. But right now, we don't have triggers to break that. And that's why you're trading this range right now.
Okay. Well, Mr. Tulsian, I just wanted to get your word in on some of the metal stocks, because base metal prices have been cooling off. They're down, I think, 6-7% over the last week, 10 days. What would a view be on the likes of a Hindalco or a Vedanta?
See, Surabhi, the non-ferrous metals are seeing all these corrections, but I don't think that that's the case with the ferrous metal, and more especially which are India-centric. Because if you really see the all non-ferrous metal stocks, whether I take a call on Hindustan Zinc, Aluminium, Vedanta, all these non-ferrous metals are always on import parity prices. And if you have these prices softening on LME like aluminium, zinc and copper, this will have its direct reflection in the realizations and margins of the local companies also. But if I come on the ferrous stocks, maybe, and which are all India-centric, maybe like JSW Steel, or for that matter Tata Steel, though they have their global presence, maybe Sarda Energy, the mid-sized companies, Sunflag Iron, Jindal Steel and Power, Steel Authority, I think they are all India-centric. And in fact, in the Q1, which is not seen to be generally the best quarter for the steel company, ferrous metal steel companies, but this time April and May has seen the price rise, and Q4 was the best quarter, and I think that Q1 will maybe in terms of volume, you will see the lower offtake, but in terms of the absolute realization and margin, I think there will be a good improvement on a sequential basis over Q4 to Q1. So we are keeping positive view on the ferrous metal, that is steel stocks, purely steel stocks like JSW Steel, Jindal Steel and Power, Steel Authority, Sunflag Iron, maybe Sarda Energy kind of stocks.
Okay, Mayuresh, your thoughts on Idea Cellular after the kind of big decline that we have seen today?
No, again, I think the news, Anuj, that is probably coming through is probably going to take a hit in terms of the near-term earnings for the stock. In terms of what can probably come through in terms of their merger, I think a lot of synergies have actually got built in terms of models that a lot of analysts have built through the second half of FY19 and running into FY20. So I think the benefits of almost 11,000 crores probably built in at this point of time. The second element in terms of once the merger goes through, again, I think is the kind of RMS share and the SMS share that one talks about. So I think with the capping of circles and the kind of expectations that one has in terms of both its data ARPUs actually remaining at lower levels because of the aggressive plans of Reliance Jio, I think the near-term cash flows are also going to remain tight. The third element also in terms of what can actually come through in terms of the try order is what you're probably hearing. I think that can have an incremental hit as well. And let's not forget, I think there are also some contingent liabilities that one is talking about. So for an Idea in particular, I think the debt to EBITDA level is probably way higher than the other incumbent Bharti Airtel. So at around 8.5 times, Bharti Airtel at around 3.5 times. I think Airtel sufficiently looks, I think, well positioned, in fact, to run through, in fact, of these entire process of down trading of ARPUs and what we might witness in terms of constrained cash flows. So large element in terms of whether there is value of Idea at this price. I think there is value, but will it get affected in terms of cash flows? Will it get affected in terms of near-term earnings? It absolutely yes. So again, I think as a call on the sector, I had probably a pessimistic view on the sector as a whole, leaving aside Jio, whose dynamics probably are looking a tad bit better than what the other two are doing at this point of time.
Okay, all right. Let's take a quick break. On that note, we'll come back and get you the last half-hour calls, BTST or STBT ideas, as our experts advise. Back in a moment.